All right, a little while ago, I sat down with U.S. Trade Representative Mr. Jameson Greer, talking about Hollywood movies and a whole bunch of other things. Please take a listen. All right, great pleasure. Joining us now is U.S. Trade Representative Jameson Greer. Jameson, thank you, old friend. Appreciate this very much. You spoke to the New York Economics Club today. I put in a plug for that. Let me begin with the latest, hottest tariff, and that is anything outside of Hollywood. 100% tariff. Now, that gets complicated, but when's that going to take effect?
Well, what we're going to do is we're going to start some investigations, right? Because all of these countries, whether it's Canada or Australia or the UK or certain countries in the EU, they actually have a bunch of practices that are unfair. Some of these countries will limit a quota of how many American movies can appear on screens. One particular nefarious thing they do is some of them essentially do a shakedown, where if you're a U.S. studio and you want to film there or show movies there, they will actually charge a fee to you. They'll assess a tax almost.
Canada.
For example.
Canada. A friend of mine who works for a movie company, I don't mean to interrupt, but he's telling me 30% revenues have to go back into Canadian movies, and those monies could conceivably come to the United States. They might not go to Hollywood, California, because California is such a mess, but they're going to places like Texas and Georgia or the Carolinas. In fact, somebody even said New Jersey. So, it's like the digital sales tax.
Yeah, I mean, it's essentially a transfer from our competitive media companies to the less competitive media companies in other countries.
When's that going to go into place, you think?
Well, we have to do, I'm not going to give you a hard date. We have to do some investigations and make sure we have a good handle on it, and we calculate the value of all of this. But the president's very eager to do it. It's not the first time he's talked about it. And so, we'll get together with him. We'll have our analysts look at it and see what we can do.
All right. Now, we've got a whole bunch of new tariffs. I mean, I want to get updates on some of the country deals. But 100% pharmaceuticals, 50% kitchen cabinets, 25% heavy trucks, 30% upholstered furniture. When's this stuff going to go into place? And it is a bit confusing, I think. People are, you had them. I mean, the tariff panic has passed, Wall Street, but all these things, I think, are complicating it. When does it go into place? Why are you picking these particular sectors?
Sure. So let me set the table just a little bit. So we essentially have two tariff programs going on right now. On the one hand, we have what we call the reciprocal tariffs, where every country in the world has a tariff assigned to them. A lot of them it's 10%, some it's higher, depending on the size of their trade surplus with us. With China all in being the highest. And then we have sectoral tariffs, which is what you're talking about. We want to get our trade deficit under control. That's what the reciprocal tariff is about. And then we have sectoral tariffs on areas where it's really important that we reshore manufacturing. Sectors and supply chains are important that we have for economic and national security reasons. And that's why we have sectoral tariffs on things like steel and aluminum, automobiles, pharmaceuticals will be starting, and they're semiconductors down the road.
Do they bump into each other? Because that's what people are asking. I mean, the reciprocal tariffs, I like that whole policy and have argued strenuously in favor of that policy. So how does this cross currents? Can you explain to people how to think about this? I know there's sectoral and reciprocal, but when do the twain meet, or do they meet?
So that's a great question. And what happens, like last night, for example, the president signed an order on lumber tariffs that are national security tariffs, because we have to have the lumber, we have to have that whole supply chain locked down. And so when that happens, the items that are subject to the sectoral tariffs, that's all, right? If they are still covered by the reciprocal, you just move them over to the sectoral. So they only have one at a time. That's how that works. And then when it comes to countries with which we have deals, whether it's the EU or the UK or others, in the terms of those deals, there's been an assessment with respect to national security already that with these countries, we can deal with them. So they're going to get the benefit of their bargain on that, of 15%.
National security, if you're going to win IEPA, this Supremes, it has to be, I thought, based on national security, foreign trade policy is foreign policy, isn't it?
So that's actually funny that you asked that.
I mean,
I usually tell people trade policy is domestic policy. That's
Yeah.
what I say, because we're trying to get more jobs in America for the working class and the middle class. We're trying to get manufacturing here. So in some ways, it is domestic policy, but obviously because we're dealing with other countries, there's a foreign policy element.
I think so. I mean, I think, I think the president has foreign policy in mind a lot of the times when you're dealing with the European Union and or Canada and or China. Tell me about China. Update us on China.
Sure. So most recently, we met with them in Madrid, Spain.
Yep.
This was really about TikTok. And there's a commercial deal with TikTok, but then there's also Chinese government approval. And so Scott Bessent and I, the Treasury Secretary, we went to talk about Chinese government approval. And so we had a conversation with them about securing that approval and generally speaking, the investment environment for Chinese companies in the United States. Separately, right now, what do we have with China? All in, we have an average tariff of about 55% on China.
Mm-hmm.
They have a much lower tariff on us. Our trade deficit with China is really shrinking, which is great. It's down by 30% this year already. We're trying to get to stability with them. We need to have more balanced trade with them. It needs to be trade in non-sensitive goods, and it needs to be the kind of trade where they're not using economic coercion, where we don't have surprises, where it's reliable. We don't want to decouple, right? But we want it to be stable, we want it to be healthy, we want to manage it as much as possible so that we're not too dependent on them for things we need.
Is there unambiguous agreement by the Chinese government on the TikTok deal? Unambiguous?
I mean, our understanding coming out of Madrid is that they're willing to approve this. They're going to approve this, and that's what matters, right? We were dealing with the highest level negotiators who have the ear of Chairman Xi, and there's actually quite a good bit of constructive conversation between our side and theirs. That's the official channel. And so we feel confident that we'll be able to secure that approval.
Well, you're making about $300 billion in tariff revenues this calendar year. That's
Right.
what the numbers show. And the interesting thing is, despite all the yelling and screaming with the Federal Reserve and whatnot, there's really no evidence of goods prices rising from tariffs. In fact, they're barely rising at all. In some cases, they're even falling. So I think that's pretty good. So what's next on the calendar? What's your next project?
Well, I just got back from Malaysia. I was there for a few days, meeting with Southeast Asian countries, all of whom are essentially moving towards final formal deals with the United States to open their markets.
So there's more country deals coming.
That's right, and we've announced the high-level details on some of these. But the president is going to do a swing through Asia at the end of October, and we expect that at that time we'll be able to sign some of these deals.
And he'll be meeting with Xi in that trip.
He'll be meeting with Xi and other presidents.
So something might happen. Are you preparing a trade agenda for that meeting?
We are. Yep, we're in deep conversation with Treasury, the National Security Council, the National Economic Council, everybody.
Well, last one, very last one. If the IEEPA lawsuit doesn't pass the Supreme Court, will you go back to 232 and 301?
Well, first of all,
301 is unfair trading for people who don't
Right.
know, and 232 is more national security.
yeah, you know this. This is good.
Yeah,
you
no.
should
Well,
you should come back and work for us.
Listen, Lighthizer taught me well. Lighthizer taught us all well. If he's watching, I don't want him to get a swelled head. But it will take much longer. It would draw out the whole process.
Well, I would say, first of all, we feel very confident about the IEEPA case at the Supreme Court, right? We had a very strong dissent with some of the smartest judges. We think the president is well within his rights, and he's using the statute how it's supposed to be used. Second, the Section 232 tariffs that are in place, they're not under litigation right now at the Supreme Court. So all that stays in place. The Section 301 on China, the case no one's talking about is last week we won at the Federal Circuit the final case approving those. Yeah. So all of that is in really good shape. We have other Section 301 things that we're doing. I mean, the reality is tariffs are going to be part of the landscape, of the policy landscape going forward.
Indeed.
They just are.
Yeah. Jamison Greer, U.S. Trade Rep. He is a very busy fellow. Thanks for your time. We appreciate it very much.
Thank you, Larry.
Jamison Greer, pretty smart guy if you ask me.